We're here at Token 24/9 for this interview on site. I'm joined by Cindy Leow, the co-founder of Drift, to talk about the exciting world of DeFi. Cindy, welcome to Crypto Weekly on CNBC
Thank you so much for having me, Henri.
Before we jump in and discuss the latest trends on DeFi, can you please share with our audience what is Drift and what's the use for a lot of customers that can want to use it?
Absolutely. Drift is the largest DeFi platform on Solana. We call ourselves a DeFi super protocol, where we have 5 different functions, all in one cross-margined protocol. We have borrow lend, over $1.5 billion in deposits. We have perpetual trading, up to 101x leverage, highest leverage on chain. We have prediction markets. We have wealth management, vault products, and we have spot trading. So what we call ourselves is a DeFi super protocol because we enable all of these functionalities to take place in one single protocol.
So let's talk about that for a second, because we talk on the show a lot about the rise of DeFi and how and where you think we are when it comes to, and maybe a bit also a contradictory word, but the institutionalization of DeFi, and how can it evolve to the next stage where we can have more institutional players within the DeFi ecosystem?
The biggest unlock I see for DeFi in the next year is going to be in institutionalizing assets and bringing them on chain. Some examples of this include private credit, real estate, money market, bond tokens, and really finding a way to tokenize this, bring them on chain, and figuring out a DeFi use case. So one key example is using a private credit token and being able to borrow against it and being able to trade using a private credit token, right? These tokens are yielding anywhere between 8 to 12% in the real world. When you bring them on chain, you actually unlock a complete new use case. What I'm interested in is these net new use cases and innovations in DeFi, not just, the usual over collateralized borrow lending. That stuff is really boring, right? It gets tired easily. But this convergence of real world assets into the utility of DeFi, as well as adding on the jazz of prediction markets, creates a world where DeFi can now actually be the home of all finance. And we think this is going to happen very quickly in the next year.
So let's use that example you mentioned of using as collateral, let's say, any real life asset that is tokenized and put on chain. Do you believe that could be a competitive advantage versus centralized platforms, where in many cases, I mean, they're having stable coins, maybe yield bearing stable coins in the future, where this is an area where you could have a certain advantage in contributing to the growth of DeFi?
We are, for one, built on layer 1, which is Solana. And the benefit of being built on Solana is that all these assets are being tokenized on Solana first and foremost. That means that we have first mover advantage when it comes to listing these assets. They come to us first. Centralized exchanges have very long compliance processes. And, as a DeFi platform, we care a lot about regulatory compliance as well. But we do have the flexibility, agility to move really fast. And because we are also built 100% on the L1, all these assets that are issued can be on our platform from day one. So that's why we've captured a lot of the meme coin boom in the last year. These new coins were launched on Solana, so they're naturally already on Drift, right? Same thing will happen for private credit and RWA tokens. So I think we have a first mover advantage compared to centralized.
When you look at your typical user, I mean, if you talk some of the instruments you mentioned, right? Borrow lending, being able to trade crypto derivatives, perps, when we look at centralized exchanges, there's often a type of client that trades this, whether it's retail that wants to go long or other traders are leveraging. How do you think your user base is different from the user and in the DeFi world with Drift from the same user base that is trading the same instruments in C5?
Our user base is more sophisticated right now because it does take a level of sophistication to self-custody, care about that, use a hot wallet, cold wallet. And so I would say that our audience right now is more sophisticated. They care more about using cost margin, right? One example is I only have Bitcoin or I only have Sol, and I want to be able to leverage trade against my Sol as collateral. I don't want to sell. I'm very bullish, right? I'm getting yield on my Sol while I'm trading. So our audience cares a lot about capital efficiency and saving cost of capital. I would say the retail and central exchange is a step kind of further where they're okay with just using USD as collateral. I think that as we educate more of these centralized exchange users in the self-custody, making it also easy for you to store assets on chain with things like Google extensions, right? Being able to use a Gmail account to trade. We have launched this. We've launched a mobile app that's coming up this summer. that's going to make the experience super easy. No more, wallet connection on our user base, and get us to the non-sophisticated users as well.
I want to talk about the U.S. for a second. We know when we talk with centralized players, the landscape, of course, in the U.S. has changed radically in the last couple of months. What do you think the impact could be on DeFi, which obviously in a DeFi and decentralized world, technically a nation state should have no impact, but I guess there was a lot of regulatory changes around DeFi. Keen to hear, what do you think the impact these changes will have in the growth of the DeFi ecosystem?
I think since the Trump administration, there's been a lot more forgiving attitude towards the DeFi projects, which has allowed for more innovation to flourish in the States. And looking at distribution, traditionally, a lot of it has come through U.S. users, right? The growth of AMMs happened in the U.S. The growth of even launchpads, meme coins started in the U.S. And I think it's a place that we cannot ignore, right? And seeing regulations become more relaxed around borrowland, earning products. We recently just launched a vault products where anyone can deposit into vaults run by hedge fund managers. And typically, you have to go through a very rigorous compliance process of launching a hedge fund offshore. But now you can do this all in one click on chain. And the relaxed regulations around, managers and earn is really going to allow a huge amount of capital inflow into DeFi.
So maybe to finish it off, exactly on the point you mentioned, right? When you look at the future of asset management, you mentioned cases of, people can have invest in a vault or deposit assets in a vault run by a DeFi hedge fund manager. How do you see that evolving, and to what extent do you think, what could be the catalyst to see more growth and more assets in those vaults and basically decentralized asset management?
Two things. The growth of yield off-chain and on-chain. A lot of these trading strategies are downstream of yields in crypto, right? So the higher the funding rate yields, for instance, right now it's at 8 to 10%. There's under-collateralized lending happening at 15 to 20%. The more yield someone is willing to pay, the more a hedge fund manager has to work with, right? So as we get yields from off-chain, like RWAs bringing 8 to 12%, on-chains going to 15, 20%, I would say that it becomes more appealing for a person to launch an entire hedge fund business on Drift versus, setting up a Cayman entity and trying to raise elsewhere. I think the catalyst is really going to be in growing the rates off-chain and on-chain over the next year.
That was very interesting. I think very exciting times ahead coming out in DeFi. That was Cindy Leow, the co-founder of Drift. Cindy, thanks for being with us on Crypto Weekly on CNBC Arabia.
Thank you so much. This was awesome.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.